Hello and welcome to this week's Unearthed Observer Report, and most importantly, Happy New Year 2010. First of all, we'll have a look at the global indices. There's been a lot of movement over the last sort of 24 hours on the global market, so let's have a look at those first. Looking at the Bloomberg website, we can see that the indices all had quite a rally last night. The S&P 500 was up 1.6%, so that's quite a big one. The FTSE 1.62, the DAX 1.5%, and yesterday the Nikkei was up 95. Oh, sorry, that's today. The Nikkei is up 95, and the ASX 200 is up just over 1%. Now looking at how that reflects back onto the weekly charts for the indices. The ASX 200 is, this is this week's bar. That was yesterday's data, so it's not showing much there. But today it's actually already up over the 4900 level at 49 about 28, which is just around about here on the chart, which is just on the upper part of, you see this blue band that I have here that runs horizontally? Well, I'd like to see the market move above that with regard to this short-term double top that we're needing to push through here from the October high. But also I'm keeping in mind that the 50% Fibonacci level is up near the 4962 as well. So there's been quite a good strong move up here, and also with today, more strong movement in the upward direction. We could very well be starting the next new trading cycle, or the primary cycle now. It has been a very unusual start to it, which I'll go to in more detail on the daily basis. As I've mentioned in other reports, this is typically the strong rise that you'll see coming out of a new trading cycle. So not to say that the strength isn't there as yet, but I just need a bit more confirmation beforehand. So that's the thing within trading, is it's all about probabilities, and we're looking at the highest probability across many different scenarios. So I like to be quite suspicious of the market. I don't like to be too optimistic or too pessimistic. Instead, I'm suspicious and would rather look at high probability events, because the market most certainly does have is known for tricking people, and just as you're thinking it's going one way, it'll turn around and do the other thing on you. So it's all about looking at the highest probability events and keeping an eye out at those high probability events, and just being mindful of what could potentially happen. A quick look at the DAX on the weekly chart. This is this week's data, being last night's data, the nice rally that we saw there. Last week we actually saw a bit of a doji there on a weekly chart. I'll actually just make that a little bit bigger so we can see what we're talking about here. But what it is that the market opened up, rallied up during the week, and then closed down on its low. And that is usually a reversal in the market. As you can see here, this is a doji bar here. Market opened up, rallied upward, closed on its low, had another doji bar here, and the market dumped the following week. So we have actually seen that push through that reversal there. So that's, with the high probability events, it's usually 80 to 90% of the time it will perform as expected, but there's always that 10 to 20% of the time that it won't. So FTSE on the weekly chart, it too has had its rally this week here. And this, of course, the bar of last night, or for this week, it obviously hasn't fully formed yet, was a nice strong bar, and can you see it's stopping dead on the actual Fibonacci level, the 38.2% level there, which was interesting. Previously, last week's bar as well, similar to the DAX, was a small little doji where the market opened up, rallied up, came down and closed near the open of that bar, but it obviously wasn't strong enough to reverse this market. Now, the Nikkei The Nikkei is currently trading around about this double top level here at, I think it's, let's have a look at the Bloomberg, at 10,756 as we speak, and that's very close to this double top area here. So it'll be nice to see this market push through here before really entering into that one again. And the S&P 500, that's again is showing its bar from last night, and is showing a nice strong bar breaking up above this level here where it was finding resistance previously around the 50% level. It's actually even broken up above the band that I would like to see, so this market could push on through. Has, as long as it closes for this week, above there, seeing as this bar has not finished for the week. Obviously we need to wait to Friday to see where the close is of that bar. It may very well turn around and close down here somewhere, so we need to see a close above this top line, which I'll show you here, this line here. We need to see the market closing above that for the week. So let's have a quick look at the daily charts. Now, as I mentioned before, the market is currently trading around this level where I have the hair pointer here, but it doesn't necessarily mean it's going to close up above there for the day or even the week, which I just discussed on the S&P 500 chart. So it's a matter of just really waiting for that confirmation. Like last primary cycle, we had a similar event. Obviously, when we're waiting for the market has come down and made its cycle low and it rallies out, you will find that it has some sort of temporary hesitation or sideways movement as it reaches the old high, which is a short-term high. Once this pushed through, I wasn't even satisfied on this. And the reason for that was that if you see here, when the market closed for that day, it actually rallied up and then closed low. So it hadn't broken through on a strong enough bar for my liking. The following day it did. It broke up nicely through, and we actually entered the market around about this area here. It's about getting into the market when you're getting strong enough confirmation that we are starting into a new direction. And we actually rode that primary cycle right up into the top there, and that was a very nice profitable trade. It was around about $5,000 per mini contract, or $50,000 per contract for the actual standard contract on that trade. So these are the most profitable trading areas. Unfortunately, this isn't really showing me much strength of late with this sort of a market. Okay, it was the end of the actual year, near the festive season, a lot of this sort of movement as well. So the volumes are lower, etc. So, but there's a lot of things that we're looking at there, which you can see what we're looking at. On to the Forex market. We actually got out down around here of this market, and the market is sort of just before it was Christmas or New Year, and the market has been going sideways since. We're looking to re-enter this market at the moment today. And the British pound, same sort of thing here. We actually haven't been in this market for a little while, but we're looking to re-enter this market today as well. Same with the Aussie dollar. Again, we've had an entry there, and then as well onto the USD CHF. We're looking to re-enter that market again today. So what we're wanting to do is just nicely get into those markets, take our profit early, put them into a no risk situation, and trade away. Gold has also had a bit of a rally as well, and is looking very nice. And once that gives us confirmation with regards to a bit of a pullback, we'll look to entering that market as well. And finally, oil as well, but it's nearing a double top here as well. I'd like to see it push on through with a bit of a breather with a pullback, and then we'll enter that market as well. Have a safe week, and I hope that everyone's really enjoyed themselves over the festive break, and that you have a fantastic 2010. Bye for now.